Good morning, everybody. I'm going to wait a couple minutes for people to start joining before I really start talking. Okay, so just pulling up Polymarket, we can see that Donald Trump has a 63% chance of winning the election. This is the strongest it's been in a couple days now. So he got as high as 67% recently, and he took a bit of a dip this week, and then but the last couple of days he's had a bit of a rally. So I'm not sure it's correlated yet with the market. However, in the past two presidential elections, the uh, on in the afternoon and into the nighttime, when Trump is winning, the market goes up, and then when he's losing, the market goes down. So you can actually watch the news and then have the uh, have the markets up right next to you, and you can see that when Trump is winning, then the market will start making bullish candles and it'll start going up. And then if news comes out that they're losing a certain state, then the market will start going down. That's what's happened in the last two elections. That's what I've watched live. And will that happen this time? Not sure. However, I do think the market will find out what it wants to do, and then it'll follow that for the night. So my guess would be that if Trump is winning, so if news comes out tonight that Trump is having an advantage, then the market will rally. And if he's starting to lose an important state, then the market would fall. And I'm saying that just because that's what's happened in the past two elections. But tonight might be something different. Good morning, BP. You've pretty much missed nothing. We just got started here. So talking about the candlesticks we've had today. Well, we've had a rally. Now this is still on the open, and this is still a chance that this is a opening, that this move on the open will reverse. 50% of all moves on the open reverse, and this is still included in that. There's also a possible wedge. So we have the three pushes up here: first, second, third. So if I was long, let's say I'd bought this second bull close and I held through this, I would hold for this first bear bar, but after I get the second bear bar and this wedge pattern, I would get out below that bear bar. So if I was long, I'd be getting out below that bear bar. I'm not ready to short just yet, but if I was long, then I would want to get back to even. Looking at the daily chart, market's been in a trading range the last 3 days. Just based off of the price action, today's likely to continue that pattern. However, we're close enough to 5,800 that we'll probably be able to test that 5,800. I mean, we are only 12 points away from it right now. So I expect a little bit more up, at least to test 5,800. Then from there, market might be able to hold on and might be able to move all the way up and close this gap today. So we'll keep those in mind. But after it does that, after it closes that gap, after it tests 5,800, we might find more sellers there because we are in this trading range, and we'd be selling up higher in the trading range. We'd be near the moving average. Pulling up the crude chart here. So far, the market opened, and we had a bit of a sell-off, and found a double bottom. Market has not yet touched the moving average. So I really think this would have been better if it did touch the moving average, because now the moving average is going to act as, right, every day touches the moving average. So now this moving average is going to act as a magnet. So even though we're bullish here, double bottom, strong bull bar here, breaking out above this high. I don't think this was that strong of a bottom. So I'm concerned about this rally being able to have much more up. Gold's had this sell-off, and immediately what I see is this wedge pattern. 3 pushes down. Similar to how the E-mini's looking with this wedge pattern. So gold, if I'd shorted through here, then I want to be getting out above this bull bar. I'm not getting long above that bull bar, but if I was short, this is how I would want to manage my trade. I'd want to be getting out above that bull bar. It's a possible opening reversal, but I'd want to see some sort of double bottom or failed sector to short, and then I could look for a long. Because how this stands now is that we're probably looking at there being a little bit of a pullback here, but then the market is likely to resume. So I really need to see the bears. I need to see the bears try to resume and then fail to before I start to look to go long. So tonight is election night, and I will be back tonight. I plan on streaming at 7:30, and we're going to watch the market for during the election. I think it's going to be a lot of fun. Um, I'm gonna go ahead and put in the Discord that we're doing that. ABP. Um, so we have this big price section, and whoever can guess the closest price to of the E-mini on Friday at 4:15. So if you can guess this by Wednesday at noon, guess the closing price of the E-mini this week. Whoever's closest will get a $25 gift card. So if you'd like to, you can go ahead and put a guess in this big price section. You can get a watermark indicator for free for NinjaTrader, so you don't need to keep moving the text around. Okay, that's a good idea there. I assume I don't already have that. So I can look that up. That'd be a really good idea. So we have these two bull bars now. So my thinking is we have this wedge, and we should be reversing down here soon from this wedge. However, if we do get a breakout up of this wedge, then that would be a swing trade. So because we do have, the day has been bullish, we do have this double bottom here. I think it would be reasonable to go for a swing trade above that bull bar. But I don't like it for a scalp. I think the risk of there being one small push up and then reverse it down is too high. So if you're going to buy above this, you need to go for a swing. You need to be going for at least 2 times your risk. But really, I think if you're taking this buy, then you have the premise that the market's going to come up here and close this gap. So unless you have reason to believe that it's going up here, then I think just wait, because the odds are low, so you're probably going to lose this trade most of the time. All right. So gold, if I was short, I would have gotten out above that bull bar. Basically now, if you're trading gold, then I think you're at the point now, you just wait to see which side fails. So the bulls are trying to go up now, and if they make several attempts to go up and then fail, then it's probably going to go lower. Or if they try to go lower a couple times, and they are unable to, then they're probably going to go higher. That's especially true since we're kind of in one of those that transition area. So we're going from the opening of the day to the middle of the day. So we have this gap, this yellow box below. So just in case the market starts to have a big sell-off, then this gap would be a target for that. Now, I don't think that's going to happen, but just in case the market does start to rapidly decline, then this might be where it's going. With the election, there will be increased volatility. So I know NinjaTrader is requiring 2 times margin starting at 6 p.m. tonight, going into, I believe, the open of tomorrow. So any trades that people want to take, they need twice the margin to be able to do it. We could be setting up another wedge pattern here. So we have this first one. Then we would also have this wedge here. So once again, if I'd gotten long through here, I want to be getting out below a bear bar. So what's good for the bulls right now? What's good is that we got a close above this close here is above this high and this prior bar's high. So that's good. That increases the chance that we're going to have a move up. So this is yesterday's chart, and I was saying yesterday that it would have uh, lots of reversals and lots of bad follow through, and that was true all through here. It's also true on this because this is a strong move, and I was saying strong moves would not have much follow through. Um, so you have 8 bars down right here, and then this is your follow through, just a little bit, and then ultimately this breakout failed, and we had this reverse back into the range, and from there had these quick reversals again. So I mean, I wasn't expecting such a strong move like this, but I was mentioning that a that any strong moves probably would be reversed. So strong move, but this did not lead to a further breakout. It reversed back into the trading range. And what did it test as it came back up? Tested the open of the day. So it came back right here and tested the open, and that's what the market does. I do think there's a good chance that we will have that second wedge like that was drawn in here. Maybe on this bar or on the next bar, we would have a bear bar, and then I'd be wanting to get out below that bear bar. And let's say the next bar does become a bear bar, then that might be a reasonable short. We'll have to see how it forms though. So gold has had this wedge pattern, and after a wedge, you expect 2 legs back and about 10 bars. So far we've had 1 leg and 4 bars. So I would expect there to be a little bit more up. And at that point, then the bears would start to look to sell again. So I think if the bar closed something like this, then I would probably try to do a swing short below it. But if it grows too large, then I'd have to ignore it. So in an example of a wedge would be right here. 3 pushes up, and then a bear bar. And this is the swing trade you were able to get off of that. Now I like the size of this bear bar. It's not too large. I'm concerned. I think this one's getting a bit too large relative to the other size of the bars. I would want to get out below. See, now it's becoming so large now it's the point where it's almost just like it's at the bottom of this trading range. So look at all this as a trading range. Now we'd be basically selling into the bottom of a trading range. We have a big bear bar in a bull trend, so be a higher chance that it would be bought. So because of the size of this bear bar, it's hurt our chances of being able to sell it. This open was fairly similar to what we have today. We had 2 bull bars. We had a sort of a wedge here, and it broke out above it. But ultimately, the day just became a trading range day. And I could see this market continuing up. I could also see it coming back down. I think at this point we just need more information. So you have this wedge, and I'd like to say that I think we're starting to reverse down now, but because this bar got so big, it doesn't make for a clear short below it. Now it's looking more like we're having a trading range here. All right, Manny, we got Manny too smooth in the chat. My time frame is it's a 5-minute chart. So each bar is 5 minutes. And yeah, BP already answered there. So this wedge does hold true, where we're expecting there to be a couple legs sideways to down here. However, because of the size of this bar, this is not a good entry for a sketch short. So much of the short has already been taken up by this bar. Now, if we're selling down here, we're essentially selling at the moving average. We're selling near the lows of these bars. And since we're having this more trading range movement now, it's harder to say, are we going to come up here or are we going to break back down? We're close to 5,800 still. And we can see we need about one more point from our high to get it to 5,800, and the gap is also above. I'm leaning towards this being bullish. But of course, we need to remain flexible, and um, if the bulls start to try to go up several times and they're unable to, then we would give up on that idea of the day being a bullish day. Um, this is a long name. Um, I'll call you Utu for the first three letters there. Utu. Utu. What do you normally trade? Do you trade the E-mini or do you trade other markets normally? Trade the Nasdaq or the E-mini? Yeah, Nasdaq is very popular these days. A lot of people trade that. Yeah, exactly because of the craziness of it. I can pull up Nasdaq. See, so this is the Nasdaq chart. This is looking like even more of a trading range than the mini is. We basically had one leg up and then now we've been sideways. And instead, in fact, I'm seeing more of a possible wedge on the bottom here. So let's look at the daily chart again. Today and the prior 3 days, we've been in this sideways trading range. We possibly have a double bottom here with this and this. So these two bars create a double bottom. However, to be bullish and to be buying, we have to be buying right into the moving average. So what I've been saying really all week, well, I guess today's only Tuesday, but what I was really pushing hard yesterday was that this probably like yesterday and today will be more of a sideways market because we have the election today and the volatility really doesn't pick up until the nighttime. So until until the market picks up at 6, 7 o'clock, until we really start getting information on the polling, um, then the market really won't start to get volatile. Also, we have the FOMC announcement on Thursday, so they're gonna change rates on Thursday. So we have these two big news events coming, and people that are trading don't want to hold their positions for too long because they don't want a sudden news event to mess up their trade. They don't want to be holding long, knowing that the election's in a few hours, and then the election turns out to be negative for the market, and then their position gets hammered. So what they would rather do is trade it like they traded yesterday. They'll hold for a small move up and then get out, and then they'll hold for a move down. But then they're taking profits. They're not betting that the market's going to continue down. They held for a move up, then they sold. And then the market kept reversing because they're just getting out of their positions. So I'm expecting the same kind of moves today. Like, probably consecutive bars have the chance of being reversed. There's a greater chance they'll be reversed. So I think we can have breakouts. This is a breakout, but then expect bad follow through like this. This is a pretty strong move, and we got closes below this low. But look, this was as much as we get for follow through, and then the day ended up going 30 points above this price. So we can expect bad follow through. We can expect deep pullbacks. So from what I'm seeing for the FOMC, it looks like they have that on Thursday this week. Looks like they have it on Thursday because of the election, so they wanted to push it out another day. So looks like they're going to be announcing that on Thursday instead of Wednesday because of the election, and we're expecting a 25 basis point cut in interest rates. Well, Sniper, good morning. Thank you for joining the stream. Hope your morning's going okay. Yeah, so what you've missed so far, we've been talking about how we'll probably expect more of a trading range type market today, with where these breakouts have bad follow through, and probably, well, definitely tonight. Tonight is when the volatility will pick up, and I invite you to watch our live stream tonight. So I'm gonna have one at 7:30, and they'll, that'll be an exciting live stream because I've watched the prior to elections. I've watched the markets alongside with the news, and I've seen what happens. Um, so it's gonna be a lot of fun to do that tonight. So if you're, yeah, so if you're, so definitely if you're able to make that, then swing by then. So I'll be covering the election, and we'll be watching the markets side by side. That's not really something the news doesn't do that. The news does not, like Fox News, CNN. They don't pull up uh, a chart like this and watch it alongside of the news. But tonight we'll do that. So, Zax, good morning to you. I wanted to bring something up about the Discord. So, Sniper, Zax, anyone else watching, we have this big prize section, and so we're gonna have a competition to win a $25 gift card. Okay, so whoever can guess the close on Friday, the closing price at 4:15 on Friday, whoever can guess that and is closest will win a $25 gift card. So what you'll do is you post your comment in this section here, this big prize section, and just make sure you post it by Wednesday, 12 p.m. Eastern time. So you just need to post it by tomorrow at 12, and you'll be considered. I think everyone's kind of holding out because, why post your vote now when you can post it? Exactly. I'm waiting to close exactly as I think everyone's. Why put your vote in now when you can get more information tomorrow. So yeah, that's smart. That's what I'd be doing as well. You know, so what it did, just in general, the volatility was very high. I don't know, starting at either 6 p.m. or 7 p.m., the volatility, it gets very high and it lasts all night. It lasts uh, that volatility is increased till 1 p.m., 2 p.m., and 3 p.m. and past that. Uh, the issue with last year, 2020, was that we came away from that, right? Really not. Everyone kind of came away confused and unsure. Um, Now, what exactly happened when? I think that was the issue last year, was that there wasn't exactly a clear winner for a bit. So, I think people may have called the winner, but then the markets were very confused. There was a lot of, there was just a lot of there was a lot of confusion that night, and so the volatility is increased all the way, way deep into the night. And basically, what I observed from the prior 2 years was that, so in 2016 and in 2020, when Trump would get an edge over a key state, like when his odds of winning would go up, the market would go up. When uh, the other person's odds of winning would go up, um, then the market would go down. And that's what happened both of those times. I'm unsure if that's going to hold true this time. Um, the market kind of has funny ways of doing things. Um, but I think by 8 o'clock, 7, maybe eight o'clock, we'll be able to tell enough. You know, like whatever, like the last two times, whatever the trend is. So let's say like the market goes up if Trump is winning. If that happens for the first couple hours, it's going to happen all night basically. That's what I observed before. So this time, who knows? Maybe the market sees something different. You know, Trump, I mean, Trump is the more pro-business president. Um, like I said, the market just works in odd ways sometimes. So I don't want to put it out. I don't want to say definitely like yes, if Trump is winning, the market's going to go up. What I want to do is be flexible and look at the first couple hours and see how the market's reacting to that news because it'll probably react the same way for the rest of the night. So maybe tonight the market deems that Kamala will be better, and they'll be buying every time Kamala starts winning. Well, then I want to be flexible, and if that's the case, then I want to observe that and make that my trading pattern. So I think to get to your question was when they made the final announcement. So I would say no, the volatility did not suddenly spike up like crazy when they made the final announcement. In 2020, I can't quite say because it was a confusing night. 2016, it was clear that night that Trump won. And right as the night goes on, the odds get higher and higher for that one person to win. So by the time the announcement is actually said, we've already known for a while who is going to win. By every hour that goes by, you're more and more certain who's going to win. So by the time Trump was actually called the winner, we had already known for a couple hours that he was likely going to win. So the market had already priced in him winning. So I would not expect a sudden spike once a clear winner is decided. I think the volatility comes from throughout the night, as the odds of someone winning ebbs and flows. So still having this training range here. You know what some people would call it is this. Some people would call it a broadening wedge, something like this. That's how they would draw it. I don't really draw it like that and call it that. I would just look at it more like the market is trying to find a direction to break out in. The bears are wanting to break out down here. The bulls are wanting to break out up. So I'm just going to be patient and wait for a breakout to occur. Now let's say the bears here tried to go lower a couple times, then we got a bull bar. Probably be a good swing buy. 5,800. It's nearby, but it's still a target above, and then we have this gap above as well. So I think if we can be able, if we can trap the bears, then we could come up with a reasonable swing buy to go higher.
gives
Okay, so you're short. I assume you're doing on the E-mini. Well, if you're short, I would just get out above a bull bar if it forms. Otherwise, I would hold short. So if I was short here, I would want my stop to be. Let's have a short right here. I want my stop to be at least up here, and then at a minimum, whatever my risk is, I want to be going for 2 times my risk. If I was short here, I think the bulls have a better chance of going up, so I would not be short. But in case it does go down, I think put your stop above here. If you get a bull bar, I would go ahead and get out above the bull bar, and then if the market's going to go down, you'll have other chances to short. And then so if you don't get stopped out above here or above a bull bar, then otherwise hold short. You know what could this be? It could be a head and shoulders pattern. Left shoulder, head, right shoulder. So if you're shorting, you'd be early. You'd be one of the earliest people to be shorting because the right shoulder hasn't formed yet. So since the pattern hasn't really formed yet, you kind of have a higher risk. You have less chance of winning. However, your profit might be higher because you're selling up here instead of below a bear bar down here. So I think your odds of winning are less, but your risk and reward are better. Another concern I have about shorting is that we've maintained above this moving average. The bears haven't really shown. They've shown that they can sell above bars to make money, but it's possible these are attempts to reverse the market that are failing, and then that could be a bullish sign. So would I have entered short? No, but if I was short, I'd keep my stop above here, and try to go for at least 2 times my risk down here. There's a chance that this market could roll over and fall down here. So I've seen charts like this before where we'll move up, then kind of do something like this, and then the market gets stuck below the moving average like this, and then it like kind of collapses down, and then I should have drawn it lower because it'll fall lower down here. So there's a chance that this will happen, but I think your odds are low at this point. So you have to be able to accept losing most of the time. So if I was short and then a bull bar formed like this or better, then I would get out above that bull bar. I'm gonna be right back. I'm gonna go ahead and just get some water. So O2, so now this bull bar, I'd be getting out above that. I know you said you got out break even. Um, if I was short, this would be a bull bar I'd get out above. And I think it's a reasonable swing trade. So I think people can buy above that, put their stop below the bar, and go for at least two times their risk. I'm considering going long for myself. So I there's two main trades I take. Uh, One is I will go for just 5 points. So I'll try to risk like 4 or 5 points, then I'll go for 5 points. And um, basically I do that on a reversal. I think I was here yesterday. Yeah, so I shorted below this. Which was it? It was one of these bear bars here I shorted below, and I just went for 5 points. So whenever I can tell that the market is um, that a failure is happening, so the bulls were failing to go higher here, and I knew they were going to be given up below a bear bar, so I shorted below I think this bear bar, and I went for 5 points. Now this also would have been fine for a swing trade, but I liked my higher probability of just going for 5 points there. So that is my core trade. That is what I do the most of. Um, that's just my personality, However, I also do the swing trades where I go for like at least two times my risk. I have several examples of that on the YouTube. So if you want to go see some swing trade examples, I do have some on some videos of that. My personality is not aligned with taking lots of trades, so I kind of have this setup that I like to do, and that that's what works for me. Now I can identify all sorts of trades throughout the day, but my personality is not one where I like to take lots of trades. What kind of swing trades? So so it seems like I go for bigger moves. I talk about what the odds are and where bigger moves might occur. Most of what I do is just going for actually just 5 points, and I'll risk maybe like 3 to 5 points to do that. And this is an example. That's what I did. That's what I sold yesterday. You can pull up. I think I made a video on this yesterday, and I posted that for the swing trades. Um, Sometimes I'll do it on the 5 minute chart. A lot of the times, I will wait to see a strong bull trend on the 5 minute chart, and I'll drop down to the 2000 tick chart. So I'll drop down to a lower time frame, and then I would look for pullbacks like this. So if I was looking at the chart here, and if I'm seeing a strong bull breakout, after a pullback and a couple attempts back, so second under short, that's failing, good looking bullish signal bar, I'll basically swing trade on pullbacks to the moving average. So bullish signal bar, go over 2 times my risk, and do that. So when there's a strong move up, I'll drop to a lower time frame, and that's usually where I do my swing trades. Now I was talking about possibly buying above this bar. Would I buy? Would I leave my stop order there now? And the answer is no. I wouldn't, because now we've had this bearish follow through bar. So I don't want to be buying above this bear bar. The trade was right here above the bull bar. It's not above a bear bar. Crude oil has managed to stay above the moving average the whole way. However, look at the type of move up it's had. I mean, it's kind of an interesting move up. It's been in this fairly tight channel, but it keeps having these. Look, we have a 4 bar pullback in a channel that's this tight. Pretty much any bull bar is followed by a bear bar. So so this is a small pullback bull channel. These can last a while. But I have to point out, bears are able to make money. They're able to sell above these bars, and they're making money. hasn't touched the moving average yet. And every day touches the moving average. Though I think it's more likely that it would test the moving average before having a big breakout up. So probably people that are selling will be able to continue to sell and make money. Gold, possible head and shoulders top, left shoulder, head, right shoulder. So something you could do on gold here, you could go to a lower time frame and try to find like a second entry short on a lower time frame and short below that. Let me go to a 1 minute chart. So I would look for a couple pullbacks to happen and then try to short below that, and then that would be a swing trade down. Or look at the 5 minute chart. What gold is trying to do is called a major trend reversal. So basically we have a trend down here. You know, where's the trend line exactly doesn't really matter, because what's happening is gold was moving down this bear trend. We had a pullback that broke the trend line. And now what the bulls are trying to do is they're trying to create a swing trade up here. So they broke the trend line. They're trying to come back and test. You know, they're trying to create a higher low here. So we have this low. Now that they've broken the trend line, they want to come back and make a higher low and get a swing trade up. So the bulls are going to test that, and you know, I think the chance of them being able to do it is maybe like 40%. But if they fail to, that's why I think that it might be reasonable to try to look for shorts on a lower time frame. Your risk is going to be small, and then you can still take advantage of a larger swing trade. So Utu, you had mentioned that I talk about bigger moves a lot. One reason I do that is because swing trading really is the core of, really it's how everyone really should be trading, especially beginners. So I mean, both beginners and advanced traders should be swing trading, but especially beginners. And swing trading will be, it'll be the core of your trading basically forever. So even if you're not always taking swing trades, even if you do something a little bit different like I do, you still need to understand the swing trades and understand where they might be occurring. And the odds, just the odds are better. It's going to be easier for beginners to make money by swing trading. So that's why I try to point out a lot of swing trades, so that people can be alerted to what those swing trades look like, and I point out reasonable swing trades that I think people can take. I point out swing trades that if I was a beginner, I would want my beginner self taking, because it's going to teach you a lot by taking those, and it's going to build your confidence. You're going to be taking just good quality trades. So what's good for the bulls is that they closed above this prior high. What's not as good is that they were unable to close above 5,800. So a concern I would have if I was a bull was that all we've done is this was just to test 5,800, and there's a chance that we would be reversing down now. You know, it's undetermined. I'm not able to say yet if this market's going to go higher or lower, but people that are buying through here, they're aware of this 5,800, and a lot of them are going to be selling out of their positions at 5,800. And this whole move up might just be to test 5,800, and then from there, bears might take control. But we'll have to see. We'll have to get more information. The game plan might be to come up and close this gap. And, you know, this is why I think swing trading is so important for beginners, because the odds are never really all that in your favor. It's never really all that clear what's happening. But when the breakouts occur, then they have a large move. And when you can identify the places where it's reasonable to take a swing trade, then you can keep your risk relatively small while still taking advantage of those big swing trades when they do occur. So like this bar, to buy above this bar, you know, probably 40% chance for coming somewhere up here. So that means you're going to lose 60% of the time. But 40% of the time, this breakout's going to work, and it's going to come up here. You know, it's kind of like looking at this. I'll point out two different trades here. You know, someone that buys above this bull bar, they basically have the same odds as someone selling below this bear bar. And if you take them both, you're gonna make money, because you're gonna lose on this trade, but then you're gonna make your money back and then some on this short here. And that's essentially what swing trading is. So we're talking about possibly trying to find shorts on gold on a lower time frame. So let me pull up 1 minute, see what might have happened there. You know, possibly a short below this bear bar, and possibly a short here. So either of those might have been your swing short. If you kept your stop, if you sold here, kept your stop above this bull bar, you would have still been in the trade. So that's kind of the idea. That's kind of stuff that I'll look at. So on the E-mini, we have another wedge here. So these 3 pushes up. If I was long, I'd want to get out below that bear bar if it closes like this. I think we have an example from a prior day like this. 3 pushes up, and this is what you sell there, and this is the sell-off that you get from that. You can look at it as a double top with this high, or a micro double top. We have this high here and then this high. So it's looking fairly similar to today. Possible double top. Then we have this wedge pattern. So at a minimum, I'd be getting out of longs below this. We've tested 5,800. That might be all the buying that we have today. So I think this is a reasonable swing short below that. Ways that you could trade that. You could get out at this low. Maybe take half off at this low, and then hold the rest for maybe down to the open. I would want to try to be out below before these lows, so maybe let's maybe get out right before those lows, and you can either get out of your full position or see how it looks at that point, and might be reasonable chance that it's going even lower. So maybe get out of just half and then hold on for your rest for a swing down. Hey guys, so we're gonna be here until 12 today, so we got about 13 more minutes. So if you have any questions, let me know before we head off. We were talking about the swing short here. Never triggered. Market never went below that bar. We're assessing 5,800 again. Is this going to be a double top, or is this going to be a breakout that heads up? I'd like to try to avoid betting on breakouts today, just because we know whenever you have a big news event, like tonight will be the big news event. Whenever you have that, your breakouts are usually less likely to occur. So I'd rather try to avoid taking too many trades like a breakout like this. $2,000 tick is close to 1 minute usually. Well, if the market is moving fast, the 2,000 tick will be much more than a 1 minute. And if the market's moving slow, it's going to be take a lot longer than a 1 minute. But I mean, a lot of times they're going to act similarly. You know, I think a 2,000 tick chart is more like it's more like a 30-second chart. But it really just depends on the volume and the volatility of the day, because some days, this will be the whole day on the 2,000 tick chart is this, and other days, you'll have like 30, or 20 minutes that it does this, or 10 minutes. So probably on big volume, big volatility days, it's better to check out the 2,000 tick chart. So if there's just a lot more movement, it's better to look at the 2,000 tick chart. But then if it's kind of a slower day, probably the 1 minute be better to look at. So I like this buy stop on long. That's definitely what I'm thinking about. Um, I think it's reasonable to do. I think on a different day I would take this long. It makes a lot of sense. We have this gap to close above. We have some good bullish bars here. The only reason I'm avoiding taking this is just because the election is later. My premise is just that uh, my premise is that breakouts will fail. If this was a different day, I'd be buying above that, but today I just can't bring myself to do it. If you're taking this long, I'd probably normally just put my stop below that bar. I think more traditionally the stop would be to go below there. But normally if I was taking that, I would just put it below that bar there. Yeah, so I mean I think it's a good trade to take. My only hesitation is that it probably could be better if our context was different, if we didn't have just that the election. Look at our last 2 days. The breakout attempts here failed. Breakout attempt down here failed. Breakout attempts here failed. Day before that, breakout attempt failed. All these any attempt to really break out has failed. So here's this yellow box we have up here. This is this gap. Market closed up here, open down here, and the distance between the low of the day and the open is this. Markets like to close the gap. So maybe today it'll do that. Maybe tonight it'll do that. But certainly at some point soon we're going to be closing that gap. So bulls that are buying here, at a minimum, they want a no bear bar. So if they can at least get a doji, then that's the absence of a bear bar, and it gives them some confidence that the Bears don't have much control. All right, so they got a small bull body. So if I was long here, I would basically just keep my stop down here, and I would just hold, because so far you haven't gotten a reason enough to get out. All right, guys, it is 12 o'clock. I'm going to end the stream. Come back tonight at 7:30 p.m. Eastern time, and we're gonna have a live stream tonight for the election. So that'll be a lot of fun. So stop back by then. Market's gonna have lots of volatility. It's be lots of big moves and big news, and we'll be here covering it, trying to cover it better than the news itself, because they don't pull up a chart and actually see what's happening. So it's gonna be really exciting to be able to do that. We'll see the news, and then we'll see how the market actually is reacting to it bar by bar. So that's gonna be a lot of fun. So make sure you stop by for that. We'll be going by 7:30 p.m. All right. Okay. See you guys later.